Very good afternoon, everyone. Charles here, Frgnt Daily Charts Analysis, Frgnt Mastery, and of course, FrgrantForex.com. So it's Sunday. The markets have closed, of course, until further notice this afternoon, or rather this evening. It's 25 minutes to 7 here in Milan, and I've just got done on my weekly breakdown just for the weekend. Went over my ASR, went over what I did good, what I could improve on, what was not so good last week as well. And then we come to the charts ready to give a bit of what I would call a dry analysis. Nothing is moving, just a good forecast of that higher time frame. Why do we do that? Well, it can save you a lot of time in the morning, that's for sure as well. If price, of course, respects those higher time frames, which more often than not, the daily as well as the weekly time frame will more often than not, as I've said, be respected. Potentially as well, those 4 hour order blocks also in line with 4 hour structures. So with that in mind, that is why I have decided to just keep this to higher time frame only. And then tomorrow morning with the guys and girls in Frgnt Mastery, then we will roll down through those lower time frames to see where we can look for our patterns, look for our entry criterion setups before getting into some trades for the week ahead, week 12. So with further ado, let's take a look to see what we got. So the DXY first and foremost, I'll keep this really snappy to be quite honest. And I'll get it posted out for everyone on YouTube and in the Frgnt channel. So weekly time frame. First thing I'm looking at, to be honest, is that weekly 50 MA and how is price performing in line with that weekly 50 MA. And with that said, what can we forecast based on what's happened previously? So the overwhelming confluence I'm getting from that weekly time frame is, of course, that weekly 50 MA. We can see here in that circle element how price was respecting that weekly 50 MA, left a weekly order block behind, and price on that DXY did not come back. More recently, what we can see and what we can say is the weekly 50 MA on the DXY was respected pretty much to perfection. We'll always look to anticipate price pushing up on the lower time frames on that weekly chart, i.e., create the wick. So the wick in terms of that weekly 50 MA is what allowed us to take a potential trade using the DXY weakness, using dollar weakness for a confluence for potentially going long on GU or EU last week, for good example. So nevertheless, what we're forecasting this week, I do believe, just simply based on charts, not so much what I believe, what I have in front of me, is allowing me to forecast that price could indeed continue down to the downside. Why is that said? Well, we've got that weekly 50 MA, as I've mentioned, where price is respecting. If we superimpose that down onto the daily and the lower time frame, i.e. the 4 hour, which we're using at the moment, we can see that refined area down on the weekly time frame by weekly 50 MA. There indeed was a daily order block there, and the importance of that daily time frame is telling us the price has failed to close above that daily order block. Apologies if I called it a weekly order block before, but the daily order block. So why is that important? Well, if price is failing to break above a certain area, then of course we'll be looking for continued rejections from the same area based on history, based on the facts that we have in front of us. So in terms of DXY long term, I do believe continued rejections from that weekly 50 MA, the fact that we're failing to break above that daily order block as well. And on that downside, it looks as if we could run into some potential traffic by way of 4 hour order blocks. So in the immediacy, I'm forecasting continued DXY shorts. We could then, from looking at the 4 hour time frame, anticipate a potential bounce from that 4 hour 50 MA. Why? Again, well, the 4 hour 50 MA is being respected on the DX1, that US dollar index. And of course, when you do get towards that higher time frame point of interest by way of weekly 50 MA, what can we see here? A hold up in price, and that is illustrated by what we have over to the top right hand corner of the DXY on the daily time frame, where price is failing to break above. So we're ranging at the moment. However, on the 4 hour time frame, what's important to point out is we can trend on the DXY. We can clearly make higher highs, higher lows, if I can draw that, higher highs, little subliminal higher low before making a higher high. So that is possible on the DXY. So again, forecasting what has happened, what is possible, and now what is happening now. So at the end of a trend, more often than not, what you will see is a range-bound market. And that's exactly what we have now. At the end of a potential long on the DXY, long or rather longer term from mid-February, what we can see now is a potential hold up in price before we look for some imbalance before a turnaround for a potential short position. So for me, that makes a whole lot of sense. Where could price drive into in the immediacy? Again, that 4 hour 50 EMA before potential hold up. But long term, I do foresee price to come all the way back down. If we look towards that daily time frame, we can see that large weekly order block just here at the lows as well, where I do believe that price could well fall short down into on the DXY. So bear that in mind. Use that to your advantage across all other cross pairs that you'll be trading with the US dollar, i.e. GU, EU, AU. A good example, if you're a UJ trader, of course, you'll be heavily dependent on the DXY performance as well. So that's my outlook on the DXY longer term in terms of immediacy, as I've mentioned, potential shorts down into that 4 hour 50 MA. If we can then get a break below that 4 hour order block and the 4 hour 50 MA, then I do believe we'll have continued roll down to the daily 50 MA rejection where we have that daily order block down there as well. Very good afternoon, Denise. Thank you very much for joining. So that's the DXY. Where do we go from there? Let's take a look at, well, we should start from the top to be quite honest. Euro US dollar. Afternoon, Denise. Good evening. Good evening. So Euro US dollar weekly time frame again. That's where we start, as we mentioned, higher time frame analysis today as a result of a closed market, and then in Frgnt mastery we'll go down into the lower time frames to find those points of interest, patterns, and entry criteria before we be looking to take trades. So weekly time frame again. That weekly 50 MA is the overwhelming performance bias of what we have on the weekly 50 MA. So price did dip into that weekly 50 MA supported by the daily order block to the top right hand corner. You can see exactly the inverse to the DXY. The DXY, to remind you, in fact, if I just scroll backwards, we had on the daily time frame wick to the highs and price was failing to break above the daily order block. Now going to Euro US dollar, if I can get my words out, we have exactly the same on the daily time frame. So the performance across the DXY at the moment, what we can see on the higher time frame, is in sync with Euro US dollar. So if the DXY is looking to roll down short, we can expect the performance to then be correlated across over to Euro US dollar for continued longs. Again, as I've mentioned on the DXY, where would I foresee an immediate hold up on the lower time frames? And again, it's potentially in towards that 4 hour 50 EMA. Nevertheless, on Euro US dollar, I have just spotted it actually. We do have also here a 4 hour order block, again in sync with the DXY. So if we are looking for long positions on Euro US dollar, which I will be coming into tomorrow morning, I know I need to take a long position from as low as possible to allow myself to have that range up to where I must manage my position by the 4 hour order block, by that 4 hour 50 EMA. And the question then lies is why would I seek to manage my position by the 4 hour 50 EMA? Again, using the facts we have on board the chart, simply stated that price is respecting that 4 hour 50 EMA. So I have no reason to anticipate price would push beyond that as a result of the structure that has already been created on Euro US dollar, as well as the fact that we have that order block there supported by the 4 hour 50 EMA. What's also good to pay attention to, again, is understand, well, how can price trend on Euro US dollar? So for good example, we can clearly try trend in an uptrend direction. We can clearly trend in a downtrend. Once you then see that we have significant breaks of structure, my anticipation is that the weekly 50 MA is going to allow us to push price back up towards that 4 hour order block. I'll be looking for a short position down. I will say that shorting into a weekly 50 MA is towards the upside is not something that I would advise, but particularly because we are, well, I personally would be looking to do that towards the start of the week. It would seem a lot better if you were to ask me on a Friday or a Thursday, do I think the short position from that 4 hour 50 EMA would make sense? My answer would be no, because or towards the end of the week, that is where I'm expecting rejections of those higher time frame 50 EMAs, much like we're seeing across the charts here on the DXY previously and also here on UA US dollar. So immediate shorts, I'd be absolutely happy to take. If those short positions do not amount until towards the end of the week, then I'll be quite reluctant to take those positions. If I am drawn into a short position, then I'll have to manage it accordingly based on going break even incredibly quick, more than likely based on an imbalance in the opposite direction because just thinking about the lower time frames as price starts to push up into that 4 hour order block and 4 hour 50 MA, the 15-minute time frame is going to be looking incredibly bullish. Therefore, as the 15 minutes starts to push and leaves order blocks behind in the upward direction, I will then ensure that I am break even by the time has the ability to actually push down into an order block towards the upside for potential continued push, which would make sense because we are rejecting that weekly 50 MA. So short positions towards the start of the week, I'll be more than happy to take. Towards the end of the week, I will need to manage that more aggressively as a result of the rejection from that weekly 50 MA. So if there's anything that I haven't missed, then I'll roll on to the next pair. So that's Euro US dollar. EG. Let's have a look at the weekly time frame again, just to quickly roll through it to see what we have. Much of the same. We can see here on the weekly time frame prices respecting that weekly 50 MA. And here is a lovely example of price actually dipping below that weekly 50 MA a couple of weeks behind us. And of course, that wick would have been a lower time frame trend towards the downside. However, it's important to recognize that on the higher time frame, we have that weekly 50 EMA there. So it's important to then see where you could potentially look for a price of turnaround to respect that weekly 50 EMA towards the upside. So that's what I'm doing on all EMAs, and that's why using the 4 hour 50 EMA on the 4 hour time frame, of course, is a hell of a good guide if you have a significant range to it for looking to manage your position. Hopefully, we can have another example of that on the 4 hour time frame. So weekly time frame, no real wick imbalance. We've got one to the low here, which of course will support the long position in terms of confluence. That weekly 50 of May towards the top right hand chart. And let's have a look on the daily to see what we have. And again, by that wick imbalance that we have here on the weekly time frame, we've got a daily order block that price has just dipped into, and we've had the reaction last week Friday. So if price hopefully will look to dip slightly lower into that higher time frame order block by way of 4 hour order block refined bottom right hand chart, you can now understand why I'd be looking for a long position from this area. Daily order block refined right there down at the lows, and I love to take a long position from as low as I possibly can. That would allow me to do so, and that question then would be, so why would you not necessarily take it from here? It's not that I would not take it from there, but because it is not the absolute lows of the market, I have ample reason to lose this position. So for a good example, if I allow a little moment to explain, if I'm able to seek a pattern here that makes good sense, then I'd be looking to take the trade. What would that look like? Well, I can see the previous two 4 hour candles close bearish with wick to the high. So what I'd be looking to do is isolate a place in the market, for example, those wick highs, and look to see if I can find anything different. What that would be a bullish candle closure above that area. Once then I get a bullish candle closure above that area from that 4 hour order block, that then tells me that potentially this order block could well indeed be an order block where I should be looking for reaction from. At that time, I don't have that just yet because I'm not seeing any significant candlesticks coming out from that area aside from wick to that, well, we've got that first wick to the low, and then prices simply following trend. So on the lower time frame, or if we go to the higher time frame, first of all, there's the low, lower high, lower low, and all what this is, or rather all what those wicks to the high are simply ranges on that 15-minute time frame. So I don't want to be getting involved in a long position that is failing to create me a trend on the lower time frame. Once I get this bullish candle closure above this area, then I'd be getting involved in a 15-minute time frame that simply looks like that. I'd wait for price to come back down to, again, the absolute lows in the market, which would be a 15-minute time frame within that 4 hour order block, hopefully, and then I'd be happy and confident to take a position from that area. But until then, it hasn't proven itself, and neither has this position down here at the lows, but the difference is this is the position down the lows. Therefore, for me, this is the higher point of, or the better point of interest, whereby I can quite clearly see, by way of imbalance and smart money concepts, that liquidity came into the market there, not so much here. Of course, we will get a reaction from this area because it is an order block. Most order blocks will give you a rejection of some sort, and perhaps the rejection that we've already had from this area is all the liquidity that it has sat there at this time. So let's have a look and see how that opens come tomorrow. Since we've already tapped into that order block, technically I should be getting rid of it, but because it's a weekend, let's just see how the next 4 hour candle closes, or the next couple of 4 hour candle closes come London open, and we can go from there. So that's EG in terms of long positions. Now, the short for me makes more sense, to be quite honest. As we've seen, we are trending towards the downside, intraday perspective, lower low, lower high, lower low. Now, the leg pushing back up will, of course, be price searching for that lower high before the lower low continuation. Would that make sense? Again, yes, it would. I'd say from Monday to Thursday. However, we have that weekly 50 MA again, which price is looking to reject for the week. So it's not unheard of for price to want to dip below, for example, here, which will then bring in a nice higher probable long position for the end of the week, as we can say, well, price is looking to reject the weekly 50 MA as a higher time frame confluence. We have the wick imbalance as well that we'll be looking to work with. And of course, that higher time frame daily order block top right hand chart that you can see here. So both directions for me, again, like on EU, look perfectly fine to take. The only mitigating factor would simply be timing. If it's at the end of the week, then I'll be a little bit more reluctant to take short positions down into that weekly 50 MA. But let's see how the cookie crumbles, as they say. So that's EG. Where are we now? AU. Cool. Weekly time frame again. This time we don't have the support of the weekly 50 MA as we do on on EU and EG. And that's because this pair is just absolutely parabolic as a result of the DXY not really showing true signs of what it wanted to do a couple of weeks and months ago, as we had the tremendous sell-off on the DXY. Now, as a result of the indecision that we see on the DXY, if I shuffle back a couple of pairs so you can see it towards the daily time frame. Let's have a look here. That indecision on the DXY transpires across all other cross pairs, and we can see we have exactly the same here on the weekly time frame, even more so on the daily. A little bit of hold up towards the upside of what we could see would be an uptrend on AU. So what goes up, as they say, will always look to come down. It's just for us to be sure that price is ready, or for me to be sure that price is actually ready to turn around before anticipating a reversal trade, because what is quite clearly obvious at this time is Aussie dollar is performing strong against the Euro US dollar. So it would make absolute sense to look for higher probable long positions from points of interest, more so than anticipating shorts. But nevertheless, what we can see as we go towards the daily time frame, you can start to depict how price may well be looking to turn around. If you look at this with a close eye, again, we have understood that price can make higher highs and higher lows and higher highs. Now, as a result of the DXY indecision, we're not getting much at all here. But what's significant is Thursday's candle closure. Thursday's candle closure closed below, like I said, on the 4 hour time frame on EG towards the upside. If we can see something different coming from a point of interest, that is our first signal to be looking for a potential reversal. So we have that here quite clearly on the daily. With wicks to the low, wick to the low, we finally had on Thursday that bearish candle closure below that area. Therefore, what now could be said on the lower time frames, which you could see, or you can see rather, on the 4 hour time frame, is that after we've had a higher high, a higher low for a potential higher high, we've now had an intraday break of structure, and that's simply come by one daily candle closure below that area. So naturally then be looking for price to pull back into an area of imbalance before looking to take it short. The only factor we have against that? Well, there are a couple of factors against that. Looking at the weekly time frame, we can see quite clear, as we said, that we're very bullish from that time frame anyway. Now, the fact of the matter is on the daily time frame, we have the daily 50 MA and a wick imbalance to support long positions. So again, using the weekly time frame only, which I'm not usually in favor of taking the weekly time frame into consideration based on structure, but what must be said is price is quite clearly bullish, and I don't need to be the first to anticipate a reversal trade. So I'm more than happy to wait for confirmation on this higher time frame. So what that would be is actually price closing below that daily 50 EMA. That would allow us to take short positions using the daily 50 EMA, which would then be above current price action, like so. So once we've had that break below, we then have price coming back into an area of imbalance on that daily 50 MA transposed down through the 4 hour time frame as well to look for that lower low, lower high for a continued lower low continuation. But again, until that happens, we stick with the facts and what we have. Here looks as if it could be a potential for a nice long position. As a result of having those wicks to the lows, that suggests to me that the imbalance we have left behind here on the 4 hour, which will come to a moment, is supported by liquidity towards the upside. So if we go to the 4 hour, we can see structure a lot clearer now. So of course, to the left, that's parabolic in terms of AU pushing long against the dollar index. And then we can see for the moment that after this most recent high, price looked for the lower, excuse me, higher low and failed to make a higher high. What we then had as a result of the daily candle closing bearish below that area, we then had the lower low. Price came into the lower high where I believe I took a short position either from here or here. I can't quite remember to be honest, but I'm pretty sure I shorted AU last week, which makes absolute sense based on structure, right? One line would allow you to come to a conclusion that you're trading now in line with the 4 hour time frame. If you just put one line across there, as soon as price broke below, you'd be waiting for price to pull back into that area of imbalance by way of 4 hour order block, as it did there, and then price turned around to the downside. So intraday's perspective, it looks good. I've got the range on here simply because I would like to trade this in both directions. If price came down to the lows, then of course I'd take the long position based on structure, i.e. based on the fact that the most recent high was created from this area. Does it make sense? I'd say yes, it does, because after this high on the higher time frame, any price action that takes place in this area without breaking the low or without breaking the most recent higher low, we are still searching potentially for that higher low before potentially then looking for a higher high. So that also needs to be bared in mind. So I'll be happy to take a long position from here using the wick imbalance, 4 hour order block, and the daily 50 MA. And towards the downside, I'd also be also happy to take an intraday short position based on this most recent structure of that break, a pullback, lower low, potential lower high for a lower low continuation. So the range is quite tight based on your stop loss placement. But again, as intraday traders, you should be comfortable taking both short and positions from a nice trading range. And that's the goal, to be honest. Locate a trading range, find your setup and structure breaks within that trading range, and trading becomes incredibly easy. As I've said, if price, just to finish that fully, if price breaks that daily 50 MA and we get that close below, then of course that cements the fact, or rather, if price does that on the daily time frame, what that will look like is simply our lovely 4 hour trend doing that. So hopefully we then get the pullback for continuation longs. So let's see how performance is in terms of closures on Monday, Tuesday. If we get that close below on the daily time frame, that'll be good for continuation shorts. Again, the range is pretty, well, it's definitely larger than this range for the next 4 hour order block. It's over 200 pips there. So certainly there should be a trading opportunity to the downside if price breaks the lows. But with that said, a good trading range is already there waiting for us to manipulate. So I like AU. In fact, I will already call that a green and I will check that tomorrow morning. Cool. So that's GCAD, or rather that's AU GCAD. Let's have a look. So weekly time frame. Not a lot going on in terms of weekly order blocks. To be honest, weekly order blocks are pretty far and few between, to be quite fair, as a result of weekly candles, usually pulling back down into previous weekly candles by way of wicks. Therefore, that eliminates the order blocks that can be used. Nevertheless, we've got one right there at the low. So I'm not, well, I mean, there's every potential that price could get down there. Who knows? But based on previous weekly range, it doesn't look like it will be this week. What I mean by previous weekly range is simply the weekly performance of a candle. So usually on GCAD, if we take the most recent weekly candle close, GCAD moved 220 pips. The last week, roughly the same. The week before, slightly less. But as you can see, 200 pips on GCAD for a week is a pretty standard GCAD week. So with that said, 200 pips to the lows is not going to take us into that weekly imbalance. So potentially in 2 weeks' time, we can then anticipate a long position from that weekly order block down at lows. But what do we have in the here and now? We have nicely the weekly 50 MA or the weekly candle has finally broken and closed below the weekly 50 MA. So without even needing to go down to the lower time frames, we are now in a downtrend, hoping for a pullback potentially into again an area of imbalance on the lower time frame. The best probable area will be around that 50 EMA, and beyond that weekly 50 EMA, of course, we have the daily and the 4 hour order block sat there as well. Don't forget you have 5 trading days for price to want to reject that weekly 50 EMA. So as price starts to trend up on the lower time frames, it's not time to anticipate a rejection from that weekly 50 EMA, especially if it's Monday, Tuesday, or perhaps even Wednesday. It's more than likely towards the end of the week is where you're going to find the rejection from that higher time frame weekly 50 MA. So if price gets up here, that's all the confluence you need to then take that short position down, knowing that for the week we are expecting price to reject that weekly 50 MA to then close below. Right, moving down towards the daily time frame now, what do we have? So a couple of daily order blocks we can look to amount a good trading range from again. This area around the daily 50 MA looks a bit far-fetched. We're going to need price to pull up around about 200 pips for it to get up to that point anyway. But nevertheless, that would be the the highest probable short position in my opinion. So if price does get up there, I'll be looking to take potentially an aggressive short position based on that fact of rejecting the weekly 50 MA that we spoke about. Then, of course, you'll have around about 12 hours for price to reject the daily 50 MA for the daily time frame. So it should all work in sync there with a short position right there from the highs. Now, in terms of what we have going on at the moment, the inverse of what we spoke about previously, you can see here where I was looking for, no, that's what I put in now. But as you can see here, price was failing to break below in towards that daily order block. If I zoom out, you can see it a little bit clearer. So that is reason for looking for a long position from that area. That is the only daily order block in this leg. Therefore, that's where, in my opinion, liquidity lies in that order block. So I'm looking for a rejection from there. What needs to be said is potentially, has that rejection already happened? As a result of price tapping into the daily order block on Monday, off price went towards the upside. I'm not sure if I took a GCAD long, to be fair. Would have made good sense. However, with that said, we always look to refine those order blocks, and refine those order blocks we did. And then we've got a 4 hour order block where price is just sat at the moment. So again, higher time frame order blocks more often than not is where you will find a hold up in price as price then looks to come to an end to the current trend. Then you'll be looking for something different by way of pattern structure breaks before then taking the long position or the opposite trading direction as a result of what price has done previously. So it's starting to make absolute sense. With that said, if the pound is performing actually weak against the CAD, then what we might find again is what we've just spoken about previously. If we can get a daily candle to close below that daily order block, then it's much the same. Going in line with what price action is doing here on the daily, we'll simply be expecting the pullback up into an area of imbalance before looking to go short. Now, if we look at the weekly time frame, does that make sense? Well, we've closed below the weekly 50 EMA. So what are we expecting? We're looking for price to pull back up towards that point of interest before continuation short. So actually, it looks good however you want to take the trade. If you get the confirmation to go long, the long position also makes sense because, excuse me, yeah, the long position makes sense because you're trading the lower high leg. It's just important that when you're trading the lower high leg, i.e. the reversal of immediate intraday structure, you need to know where to get out of that trade. I would be looking to get out that trade by the 4-hour 50 EMA. And as we go to the 4-hour time frame, we get that information to support why we want to get out of that trade by the weekly 50 EMA. Why? Well, price is respecting it. Also, intraday perspective, let's have a look to see what price can do. Well, it's very clear to see that price can trend. So here's the low, lower high, lower low, lower high, lower low, lower high, potential lower low leg. So we are searching for the lower high, but understand again that any price action within this area before breaking here, is price still searching for that lower high before the lower low continuation? So it's very important that you're able to read price action intraday, what it's doing now, longer term also. And that's why the short position from that daily 50 MA, daily order block, refined 4-hour order block makes so much sense because we'll also be looking to reject the weekly 50 EMA as well. So GCAD for me, very easy to dissect. Again, that will be green going into the week, regardless of what happens on GCAD, whether or not you get the daily candle closure below that area, we'll still be looking for a pullback of some sort into an area of imbalance for continuation shorts. If that was to happen, I'd expect the short position to come from the 4-hour 50 EMA. Then if that doesn't happen, then I'll be looking for price to pull up probably a little bit higher towards the daily 50 EMA. So that's my take on GCAD. Of course, points of interest also, or excuse me, not so much also, but we'll always need confirmation before looking to take a short. If you're not happy or if you're not willing to wait for confirmation, then at least be trading alongside what the 4-hour time frame is doing. So therefore, what I mean by that is if you're saying, right, well, I want to take an immediate position, Charles, should I take a long here or should I take a short here? The clear answer would be for me, well, if the 4-hour is trending bearish, you want to be on the right side of price action and trade in line with that 4-hour time frame. That's going to be your highest probable type of trade as a result of using higher time frame confluence. Trade the trend. So that's GCAD for me. Moving on, US dollar CAD, we're skipping through these quite well. So US dollar CAD, weekly time frame, what do we have? Again, weekly 50 MA, how is price performing alongside that weekly 50 MA? It's not doing much, to be quite honest. So therefore, what I've done is just use some wick imbalances. I mean, the weekly 50 MA, again, we'll do much of the same. We'll have a look at the weekly range. So the most recent weekly candle was around about, let's say, 190 to 200 pips. So could price potentially get up there? Well, price is closed at the low, so we're going to need price to move. Yeah, almost 1.5. It's a standard range, but then again, when you look at most recent weekly candles as well, price can certainly do that. So US dollar CAD, it's seemingly evident that it does have some quite large weekly range candles. So it could well be that price comes up to that weekly 50 MA before then looking for rejection from a lower time frame refined order block. Also, what's nice here on the weekly time frame, we have a weekly order block. So therefore, we're looking for a lot of strength to come out, or rather a lot of weakness in terms of strength coming out of that order block. So that short for me would be a nice high probable short position. What else we have on that weekly time frame? Weekly order block to the lows as well. And you can see exactly here, if I zoom out rather, you can understand why. So it has been mitigated, but the importance of keeping it there is the fact that price is still failing to close below it. So on the weekly time frame, the difference here being I would need this weekly or the next weekly candle to actually close below that weekly order block before me truly saying that US dollar CAD on the higher time frame is looking truly bearish. With that said, then this weekly order block would be removed and I'd be expecting price to pull back to an area of imbalance before rolling shorter down to our next point of interest by way of weekly order block, refined daily and refined 4. So it's making a lot of sense at the moment. So we'll keep it there for now. and we'll see what's going on. So in terms of the long position, US dollar CAD is most certainly a pair that I believe I took a long position on last week at some stage. So let's go to the daily time frame and let's see what we have. So we know we're operating within that weekly order block left behind as a result of a couple of weeks ago. We have those wick imbalances. Why? Well, wick imbalances to me showcase that price, or rather buyers, do not want price to go any lower. Does that make sense? Well, of course, it's a weekly order block. So the whole thought process behind smart money concepts is very evident. Order blocks supports liquidity, and liquidity is shown by way of order blocks. We use the wick imbalances when we are in those order blocks or when we do not have order blocks to use, because the wick itself is providing imbalance. So that's why we're going to use those wick imbalances more often than not, only on the higher time frames, weekly and daily, to see if price is going to drive into those areas, because wicks will be filled at some point. There is no doubt about it. And when that wick is filled, we're then expecting rejection towards the opposite direction. So daily time frame, where are we? It's a little bit messy, to be honest. Let's see if we can move this over a little bit. Cool. What's also worth noting is at some stage there was a daily order block here also. However, again, price has dipped into it, failed to break below. All I did is just removed it ever so slightly so it doesn't clear the chart, or rather doesn't clog the chart as much. What's nice to see is prices respecting that. However, what we can see safely here on here again, once you reach that higher time frame order block, what's going to happen? More often than not, price is going to range. We can see here very clearly on the daily time frame that price is in a range. How do we come to that conclusion? Well, it's very evident that US dollar CAD can trend on a daily time frame. It's clear. Price can make higher highs, higher lows, higher highs and higher lows, etc., etc. However, what do we have here? I can't decipher what kind of trend we are in at the moment here based on the daily time frame. Therefore, it's very clear that price is undecided. But does that make sense based on what we've said? Price is at the lows of a higher time frame order block. Potentially now is where we should be looking for price to turn around towards the upside. So it's all looking good. Now, refine those points of interest down on US dollar CAD 4 hour. That is where I'll be looking for long positions. So wick imbalances. What's nice really is the wick imbalances. When taking positions from those wick imbalances, always, or rather in this instance, we have order blocks above. So that to me is already telling me, Charles, don't take this position immediately because I have far too many reasons to lose. Those reasons to lose are the fact of what I've just said. Wicks will look to get filled. So, of course, from these order blocks, I may well get a rejection from that. However, if we start to read price action and understand what's truly going on, so if we go, the most recent low, we could say was caused from in and around this area. So here is the low created, that's confirmed, or that low confirms that lower high. Therefore, here's structure. So price is failing to break that structure point. So again, until price is clearly broken here towards the upside, price is still potentially searching for the lower high for a continued lower low. Would that make sense? Well, of course. Are there areas where price would look to go to create that lower low before having a rejection or at least a reaction? So therefore, we're looking for price to come lower than these lows, and there we have it, wick imbalances. So I'm not looking to take any immediate positions on US dollar CAD. I think it would make good sense to take that with a little bit of patience, particularly because price is very clearly range bound. That's evident. And when you're looking for trading a range, you need to be shorting from the highs. And then in terms of the opposite direction, you want to be logging from absolutely down at the lows. So I took a short position, I think, on AU based on a wick imbalance. So there was no order block there to support my short position. However, the wick was filled and there was a tremendous rejection from it. Going down then to the lower time frames, I was able to jump onto that trade. And it was a very nice trade, I think 1 to 4.5, or potentially even a 1 to 5. So using the wick imbalances are very powerful. Therefore, what is my favored position? So despite shorting into that higher time frame order block, I still think that the higher probable short position will come from a short using that 4 hour order block. The reason behind that is we are still in a downtrend on the 4 hour time frame. Despite being in the range, we have to understand if you're trading a range, the higher probable range position will be what the current trend is, in my opinion. Therefore, the current trend is bearish. Therefore, my highest probable short position, my highest probable position in that range would be to take a short position. Now, if I'm going to use order blocks and smart money concepts to take that short position, I don't have any other 4 hour order blocks here aside from this one. What then supports that order block is the fact that the 4 hour 50 EMA is there. And what we've just said across all previous pairs is how is price performing? So price has now broken below it. It pulled back into an area of imbalance potentially to the left. We've made the lower low. Looking at what's happening if we say now. Price made that lower low. After a lower low, we'd expect price to pull back up, make the lower high before making a lower low. That's just the intraday perspective on US dollar CAD. However, bigger picture, we can simply say we're in a range. So if there are better pairs around there, which there most certainly are, I would stay away from US dollar CAD. And that's what I am probably going to do personally, because as I've just put a couple of nice flags on AU, for example, and was it potentially even GCAD or EG? One of them had another green flag. There's just better pairs out there simply based on a closed market, right? So therefore, US dollar CAD, it looks nice. However, to be absolutely certain, or rather, there is no certainty, but to at least trade with a little bit more confidence, then I'd be looking for price at least to break that range. I don't need to be the first in any trade. Ego aside, of course, it's nice to be the first in and take a nice 1 to 10, but understand being the first in, you're more than likely going to be the first out because you're going to have to manage that position to break even. Because being the first in a trade means that you're taking that without any higher time frame confluence, i.e., taking a long position now would mean I'm first in, but I have no reason by way of higher time frame confluence. We are still in a downtrend. Therefore, your management means you'd have to be break even pretty quickly, and then anticipating that price is actually just going to come down to stop you out. By the time price has stopped you out, break even or full stop out, you then have that. That's your confirmation, pull back into an imbalance, and actually be taking the similar trade anyway. So always seek to have that confirmation. Understand you don't need to be the first in the trade. It's always nice to be, but being first in, unless price goes parabolic in your direction, you'll be taken up at least break even. Have my word on that. So US dollar CAD for now, I'll give that a solid amber until further notice. As you'll see, I've got an alert crossing here. And what I'll do just for good measure, I'll put an alert down at the lows as well. So that's US dollar CAD. And finally, GU. What do we have on GU? I feel like I've not traded GU for a hell of a long time. But what's good to see again? Performance by way of weekly 50 EMA. What do we have? Rejection of that weekly 50 EMA, price close to the upside. Again, understand that that wick is, of course, a trend on the lower time frames going down. But the fact of the matter is, where did that candle close? It closed above the weekly 50 EMA. Therefore, the weekly 50 EMA is doing its job. Understand how the EMAs work across pairs, or rather across the time frames, and more often than not, you'll end up being on the correct side of price action and you'll be able to manage your trades effectively. I.e., if I'm going to take a long from these lows now, I know that I'm trading with the weekly 50 MA, but I understand because price, where did that close? Close to the 4 hour, to be honest. I just skipped to the 4 hour just quickly to finish up what I was saying. So the fact is, price is closed below the 4 hour 50 MA. So if I'm going to take a long position here, I have the confluence that I'm trading with the 50 EMA. So that's helping my trade to the upside. But looking at the 4 hour 50 MA and how price is performing with the 4 hour 50 MA, it means I have to close my position by there personally for myself, or at least manage my position by there, because looking at the 4 hour time frame, what's going on? We're respecting it. Do I have that as facts? Well, yes, I do. Price is closed below. Price wicked into it, closed below. The most recent candle look to be bullish in towards it, but still we use the facts. The fact of the matter is price has still not closed above that 4-hour 50 MA. Until price closes above that 4-hour 50 MA, I must respect that if I'm taking the short from here, that remains my target and or management position in the market. Right, so let's finish that off. On the weekly time frame, what else do we have? Price actually nicely rejected a weekly order block. That's exactly what we'd expect to happen. Also, with that said, when price looks to reject the weekly order block the first time, that's the liquidity coming out of the weekly order block. So therefore, you see the power that's come from that weekly order block. We don't, or I personally don't trade from weekly order blocks. So all that means to me is the weekly order block has done its job. Once I then refine those areas down, that's where I now need to find out, well, do I have any other points of interest within that weekly order block where I can look for rejection from points of interest? So we refine those areas down and we'll take a look into those now. With that said, yeah, no wick imbalances here that are of any real interest. Got one down here at the lows, but I'd be surprised if price comes all the way down there. By the time price gets down, if it occurs while we are still within the week, let's say this week, then of course I'll look to use it. However, price would be very bearish on all time frames if that were the case. But just for good measure, just to keep everything symmetrical in sync, we'll place it on there. The lowest wick imbalance down to the low. So what that means is, before I skip to lower time frames, let's say I'm drawing the weekly candle now. I have 5 trading days for price to want to reject again this weekly order block. In the meantime, it's more than likely this 4-hour order block, unless this is one now 4-hour candle, the 4-hour candle is probably going to break and close below this 4-hour order block. But what I will still have is this daily order block. So I have, let's say, 12 to 14 hours by the time I get to the chart for the daily time frame to reject its, or rather for the daily candle to reject its daily order block. Therefore, this wick imbalance becomes very important because I would anticipate that price will tap into that wick imbalance and fill that wick. Once price has then filled that wick, I've got my pattern or entry criteria. I'll then be using the daily order block as confluence to push price towards the upside. I've got 12 hours for that. Let's then say this happens all in one candle, i.e. the 4-hour time frame. So this is now a huge 4-hour candle. I then have the confidence again that actually price could still reject the 4-hour order block as well. So the importance of order blocks is understanding your order block is valid until it's closed below, right? Therefore, we could still anticipate, if this is a 4-hour candle, price to reject this 4-hour order block by way of a wick left to the lows. Looking at GU, it doesn't seem to leave tremendously large wicks behind. Although yesterday, actually, I'll take that back. We had one there. We had one last week as well. But a wick of that size, I'm not going to forecast it. Let's just see what happens. So that's a rundown of pretty much all of this, but I'll go through it anyhow. So daily time frame, refine that weekly order block down. We still have this daily order block sat there available. So there's every reason for price to want to come a little bit lower. I don't usually do this, but using the daily time frame and putting one line into price action, we can understand what's gone on here. We have created a new low in the market of most recent daily time frame. So therefore, after a low, we're expecting a lower high, potentially for a lower low continuation. Does that make sense? Where could the lower low continuation take price into? Well, there is a daily order block. Refined daily, we've got a 4. So that is quite a nice forecast. So anticipate then a rejection from that area, also rejecting, most importantly, that weekly 50 EMA as well. By the time price gets down now, I've seen there's a wick imbalance here also used as confluence, understanding that the wick, although this is a wick, price can still push down into that wick. So price would look like so, push down into the wick, but for the week, close above and simply leave another wick behind, right? And then we'll repeat that process. We clone that and then obviously use that then the following week as another wick imbalance for confluence to take a long position from. So it's rinse and repeat, doing the same thing over and over and over again until you're so bored that you then retire to the beach and drink coconuts. Right, so 4 hour time frame, or rather daily. No, that's good for the daily, I'd say. 4 hour time frame. So we've got from the day that we've clearly started to break structure points to the lows. Let's see if we can get that confirmation based on the daily time, excuse me, 4 hour time frame as well. So let's have a look to see what price can do. Price can clearly trend towards the upside. Let's compare this to what's going on now. Price is now turned around. We've broken structure points to the low. So on the 4 hour time frame, we are very much so lower low, lower high, lower low, lower high. So looking for a lower low, potentially from I should say, this 4 hour order block. However, I'm not convinced, to be honest. We've wicked into it. And what you can see now is if I put one line across, look at what's happened. We've had pretty much in what I would call confirmation for price to actually want to look to turn around towards the upside. So let's say, for example, this price tapping into that weekly order block is all it was going to take for price to take off and reject that weekly 50 MA. If price breaks and closes above this 4 hour order block and the 4 hour 50 EMA, my mindset is now that, well, actually, the weekly 50 MA has done its job. Now, still, I would expect after a new high in the market to be created, I would still expect price to pull back down for a higher low. But the difference is I wouldn't be necessarily expecting a lower low based on what we've just discussed. If price starts to push up above this 4 hour order block, I'd expect a pullback for continuation longs potentially then through into the daily 50 EMA, into the 4 hour behind, reject that, and then potentially I'd wait for the lower low to be created on what would be a higher time frame. Let's see price pulls back into the daily. That's what it would look like. So for me, that would make more sense. So again, it's all about timing and when these breaks occur, which could then change my bias completely. But for now, let's see if Monday morning or tonight, price respects that order block and price doesn't do that and it does quite the opposite and brings price straight back down into price action, then I'd be happy to take continued shorts. Even though what I can quite clearly see is that price isn't doing much at all, that would at least allow me, as I've said, if you can identify a range, understand to trade in line with the direction of what's previously happening. So we can see quite clearly on a fall we're bearish. On a daily time frame, we're also bearish. So therefore, if I want to take the highest probable position in a range, for me, it's going to be a short from the highs. Once we've had that closure below, in any capacity, what it could be on a 4 hour time frame, I'll be looking for my patterns on the 15, i.e. a break, a pullback, a lower time frame break of structure, and a short. The only issue I have, of course, is we're shorting into a 50 EMA, which simply means I'm going to have to manage my position pretty darn quickly to break even because I understand that price is going to want to reject that weekly 50 EMA. But with that said, I don't expect the rejection to happen first thing on a Monday. I'm going to expect that to happen more often than not towards the end of the week. So we could potentially be in a short position whereby the lower time frames are simply creating the wick before then, Wednesday, Thursday, Friday, you get the wick to be created fully, or rather the body then to be left behind. So the wick, this would be the weekly candle. It would then flip bullish as a result of a rejection from that weekly 50 MA. And then you'll simply be left by the end of closure or the end of business on Friday. You'd have a wick imbalance left to the lows on the weekly time frame. Cool. So, Denise, I will thank you personally for joining. I appreciate your time on a Sunday. And anyone else re-listening on YouTube or wherever I post it, i.e., or the Frgnt mastery groups, then have a lovely Sunday, everyone. But to Denise, the most fantastic star that decided to join. Thank you very much, Denise. I
Thank
appreciate it.
you.
All the very best. We'll
Okay,
take care.
bye. Thank you.